There's nothing quite like waking up to see all of your wealth being destroyed right in front of your eyes. Well, here's the deal. Today, we're looking at a cascading collapse across mainstream markets that is certainly having its ripple effect here in crypto land. But I believe that this resolves to the upside tremendously. So hear me out here as we're gonna go through what's going on across the world, how it's impacting crypto, some stories that I'm quite sure you won't be tracking, and making a conclusion, in my opinion, that this is going to lead to some opportunistic entry levels for those who want them, as well as playing into a theory that we've been discussing for quite some time, which is a deflationary shock that leads to yet another March 2020-like moment. And we know how that ended. So bear with me here because this is going to be very important content for understanding how to navigate the next few weeks and months. Now, of course, we're making not just once a day, but multiple times a day content here on this channel, helping you make money in the market. And the coins we've been drawing attention to have been going absolutely parabolic, certainly way outperforming the market itself. And so if you want to get ahead of this market and actually make crazy gains, then all you have to do is subscribe and put that bell notification on. And you're going to be way ahead of other people just flipping open the charts and hoping for the best. With that said, let's dive in. We're actually here on the new Ellio trade site here. It's super beta, but this is coming where we're actually gonna have a dedicated place for articles each and every day coming out. And this is going to be a subscription that you can get your hands on so you can stay informed, not just in video content, but articles as well. We're definitely rounding out the media network here at Ellio Trades. Of course, we see some recent content here. Appreciate you, BitBoy, for the content yesterday. I actually caught up with Ben yesterday and he said he deleted the tweet that everyone was reacting to. Anyway, I hope you guys enjoyed that video. And as always, we'd love to have a more in-depth and spirited conversation with Ben in the future about this. But with that said, we're not here to talk about BitBoy. We're not here to talk about yesterday's video. We're here to talk about today and this cascading collapse that's happening because of Evergrande. All eyes right now are on the US stock market and the mainstream stock markets as they react to the Chinese real estate collapse. It started with Evergrande, but it's starting to have ripple effects, and it really feels like a 2008 Lehman Brothers moment here in 2021. So we started with a bloody weekend and ended with a super bloody opening here on Monday. So what we saw is starting in Asia, then spreading to Europe and the US, we've seen stock markets crash today. And the question is, will we see stabilization either later today or tomorrow? Now, we did see a little bit of stabilization here, a little minor bounce back here of 0.3%, but this is nothing right now as we see the weekly chart here for Bitcoin just looks doom and gloom. But as we know, things can bounce back pretty quickly. And I'm going to be telling you my theory and how this plays pretty almost perfectly into this theory that we've been talking about for the last few months as to how this next leg of this really parabolic leg for Bitcoin kicks off. So with Evergrande's collapse materializing, the fear of contagion effects are spreading in financial markets, even though many observers are not yet convinced of a significant impact on European or US markets like we saw in 2008 after Lehman Brothers. And what we see here is that companies are raising a tremendous amount of debt to offset the risk of a collapse in the short term. In this case, Guangzhou RNF are raising up to $2.5 billion amid the contagion risk. We also see stories like this, which is that, hey, Chinese stocks are pulling the rug like they are shat coins. And here we see another Hong Kong stock here absolutely collapsing here. 87%, was it? 87%. We have this 2103 HK Equity, which is a real estate company here. And look at this volume signature and collapse. I mean, that is nuts. That looks like Mark Cuban's last investment, Titan. And someone aptly commented below this, did Mark Cuban just buy this or what? All right, it's funny. You gotta laugh sometimes. So many are thinking that Evergrande could just be the tip of the iceberg. Record high debt levels worldwide will continue to create instability and potential black swan events in financial markets in the years to come. As Nicholas Merton says, Evergrande is a perfect caricature of our economy where federal officials, central banks, and central planners are left to manage the economy. Remember, Evergrande just built all of these structures and just like pushed the pace of growth of development way beyond the demand. And this is where supply and demand in a free market is really the optimal solution, because if central banks and planners like China just go ahead and say, all right, well, we're just going to build all these structures, but 25% of their properties remained vacant, this is where you get the over leveraging and where you have no demand to soak up the supply that you're creating. And you have what we've seen, which is essentially vacant properties that need to be demolished in order to control costs. But this is is not the only factor causing fear, uncertainty, and doubt. And remember, there are many black swans across the board, but a lot of these will create the deflationary shock that we'll talk about in just a few minutes that will lead to what I believe will be an absolutely monstrous leg for Bitcoin. So listen closely. So we have stock/crypto sell-off might get worse. Evergrande collapse, hoping this goes away like Archegos. Fed taper talk will likely delay till November, citing weaker economic growth and jobs miss. This is what I was talking about, that the actual tapering talk is very unlikely to come into the equation here. Why would the Fed make things worse than they have to be right now? Things are not really good. And that's why having a tapering talk right now is absolutely crazy. Yes, inflation is a problem, but remember when we talked about how inflation is actually favorable to those with assets and actually favorable to those looking for handouts. So both ends of the spectrum actually benefit quite a bit, although we know in the long term, the rich people with assets and those who are getting most of the inflow of new cash, they benefit the most. But regardless, we see debt ceiling and infrastructure delays, we see corporate tax rate up, and what Kevin is saying here, and I do follow, if you don't know, meet Kevin, he's an interesting YouTuber as well, mainstream finance as well. He says, paper hand now, buy the dip later. And to be honest, if you're really scared, you could do this, but this is not what I'm doing. I'm just gonna hodl. Fear is everywhere now, and the setup for a wider stock market crash is there. However, there is no major technical levels that have been breached that would indicate further meltdown, but the risk is certainly there. And so we have this sort of competing factors here with SPY here on life support on the left here, right up against this very important trend line. And then we also have Dixie looking like it's about to break yearly highs with people rushing into cash for safety. Powell, it's going to be a busy week for you. You have big decisions to make. Of course, some kind of government intervention to stabilize the situation is a likely outcome. We know that China is known for subsidizing all of their companies to bolster their economy. However, China has already signaled that it doesn't want to support the high debt strategy pursued by the likes of Evergrande. Thus, we'll have to monitor the situation. So it's one of those things where China has said they don't really like the way Evergrande is doing things. However, the question is, how hard is the market about to bounce with a bailout headline? We know that that's what the market is sort of waiting for. And this is kind of the finicky, kind of like spoiled brat nature of these markets. I feel like this is the way it goes every time where there's something bad or something bearish on the horizon. We see the Wall Street boys just completely throw a temper tantrum and just dump it and then say, come on, mom and dad, come on, government, tell us you're going to make it all okay. And then the government steps in and says, okay, well, here's unlimited money again. And then we go back to bull market. That's kind of how it feels like it's been, and I can't imagine the music stopping on that dance just yet, but we'll get this in full detail at the end of the episode. And so with fundamentals looking healthy overall for Bitcoin and Co, sitting in spot is definitely advisable for everyone who's not a professional trader. Again, when I say advisable, this is not financial advice. This is just something that I find to be true. You're going to have to make your own decisions for your own finances. Know that crypto is super, super risky, and the bears want you to believe that this can go down to 9K again. So make your own financial decisions and assess risk that is appropriate for your own life. However, according to Pentoshi, a known trader here in crypto land, he said potential bearish catalyst, China plus FOMC on micro. I have no plans to trade the chop. This be a beach week. Spot long corn, key spot to watch is 41K if we even get there. In my opinion, 56 to 58K in October, and he's tagging BTC here. I'm def spot long, I'm bullish. Said it last week, I think this week will be noisy, lacking a lot of info. I think we could go as low as 41K, but in my opinion, we're going to be 56 to 58, just chilling in spot. So to me, this is a good summary of sort of how I feel, which is that the next leg is coming, and we'll explain a little bit as it pertains to on-chain metrics in a second. But this is where trading this chop can really get you, because if the market jumps in and we get a super highly likely article around a bailout or some kind of federal intervention, which seems to be the actual response to everything these days, then the market could just bounce $5,000, $10,000 on Bitcoin, and you're now chasing the market once again. So for me, in these particular choppy weeks where we haven't really breached any critical levels on Bitcoin, it's really important for me to just be patient and sit on my hands. I've never, ever had a really good panic sell. I've never done a good panic sell. Whenever I've panic sold, I've 100% of the time regretted it. Again, not to say that this can't be done. I have done sells at the top of the market, like in 2019. I sold in about July or August, right before the entire market really collapsed. And so I did save a lot of pain and anguish in that particular moment. However, my actual record on panic selling is horrible. So that's why I don't do it. I just sit on my hands and I invest in the projects I think are going to go absolutely crazy, and I wait for them to do it. And Will Clemente coming in again, saying almost every big person I know is bullish for the coming weeks, and reply guys are mainly bearish, probably means nothing. And this was from this morning, where he says BTC is now just $5,000 away from my floor model, meaning the lowest possible model that he sees happening, and $145,000 away from my top model, meaning the asymmetry between the floor and the top that he has projected here is dramatic. So buying here or holding here potentially has tremendous upside, whereas selling here, you're looking at potentially less downside. Again, this is all models. Models can be invalidated, so keep that in mind. But as he says, supply dynamics set up for the next few months unchanged, eyes on the prize, bought the dip. So what he's saying here is that he doesn't see any difference here with the flow of funds with the whales, and that the reality is that this is a buy the dip moment based on FUD from outside crypto that has nothing to do with Bitcoin, that will largely and most likely resolve to the upside for Bitcoin. Now again, Hashoshi, a buddy of mine, says, if you can't buy the dip, don't worry, don't have FOMO here, don't think you're doing something wrong. I agree with this. If you just want to sit on spot, that's okay. Don't feel like you need to go find some, turn over the couch and find those nickels and buy the dip. Just chill, just chill. And then once again, the president of El Salvador has jumped in and bought 150 Bitcoin. El Salvador now holds 700 Bitcoin. Well, here we are in the wild, wild west again. But I want to reiterate that I've been a subscriber to Cathie Wood's belief that there will be some kind of deflationary shock here that once again puts pressure on federal government, specifically Mr. Jerome Powell and our federal government central planners here in the United States, that make them very, very strongly committed to more stimulus, to more spending, to resurrecting the economy and growth. Because if the economy tanks under Joe Biden, well, guess what? He's not getting reelected, and we're going to go back once again to the other party. So what does that mean? Well, there's a tremendous amount of political will here to keep the music going, to make sure that the actual growth does not stop under this regime. And so what we will likely see is a massive, massive spending response if this is a cascading black swan event. So going in line with what Cathie Wood said, which is that deflation is the most likely next step, not inflation, and that deflation would likely trigger massive new spending, returning us once again to a stage of inflation, but this time with another long-lasting burst of inflation like we saw in March 2020. Long story short, the TLDR here is this shock to the mainstream markets will cause a massive spending, and that we will once again be in up-only mode for assets like we saw from March 2020 onward. What does that mean for you? Well, I mean, in theory, you don't really need to do anything. I think that's kind of the beauty. If you want to trade the chop and you feel like you have your handle on which way the market's going to go, then go ahead. But I think that one article out of, the Beijing government, one article out of the Fed, one proposal from a senator or a congressperson about increased spending and bailouts, extended benefits, all these things could then once again trigger more bullishness in the market. So we're having kind of external forces govern what's going on here. And meanwhile, in Bitcoin land, everything looks good from a supply standpoint, and even from a price standpoint, we haven't breached any critical levels yet. So I think that it's one of those situations where sitting on your hands is definitely advantageous. Again, this is not financial advice. You guys have to make your own decisions. If you're super scared, you can sell now and buy back in once again when things look bullish and peachy keen. That's up for you to decide. However, I believe that we will see some massive, massive intervention here, and that it will once again gigasend our bags. And once Bitcoin takes off, so will the altcoins. And of course, my goal is to create a total war chest that I can allocate to crypto gaming, because once this whole market does settle and there is a period of extended bearishness, which there always has been and will most likely happen again, well, I believe that's when gaming will totally take over, and NFTs in specific will go absolutely crazy. So that's my plan. I hope this has been informative. Go ahead, smash that like button if you got some value out of it. Remember, if you love making crazy gains in crypto, then all you have to do is subscribe and put that bell notification on. As always, I'm Ellio Trades. You can find me on Twitter at Ellio Trades. You're definitely going to want to follow me if you want to crack the codes this week. Things are about to heat up majorly for those who want to join the Citadel. With that said, I'll see you very soon on the next episode.